Hello and welcome to this session in which we will discuss a CPA exam simulation that deals with which business legal entity is best suited given the circumstances. So we have Jennifer and Alex that are embarking on a journey to establish a new business. It's a startup with focus on creating innovative software solution. They have secured pre-launch contract that guarantee immediate profitability once the corporation commence. Once the operation, not the corporation. Once the business commence. What does that mean? It means they are going to be profitable almost immediately. So from a taxability perspective, they are going to have taxable income. They're profitable because it makes a difference whether you're going to be starting a profitable or incurring a loss. That makes a difference in your decision. Both Jennifer and Alex will take an active role in the day-to-day management and development effort of their business. Therefore, they are active participants. They're going to be actively running the business. They aim to draw competitive salaries, so they want to get money out in form of salaries for their contribution. Most likely, that's all what they do. So therefore, they want to live. They want to have a salary. In addition, they want to receive comprehensive fringe benefits. They want a retirement plan, they want health insurance, they want life insurance, they want other fringe benefits that comes out of this business because, again, most likely that's their only source of a living income. Rather than taking distribution, they plan to reinvest all the profit back into the startup to fuel growth. And they're planning to take no dividend because any profit that they make, which they are profitable, they plan to put it back into the business. Both are situated in the upper echelon of the income tax bracket. Their tax bracket is approximately above 30% or above 30%. Now, what we are asked to do here, identify the structure that would be most beneficial from a tax standpoint view for their startup. Simply put, this could be in a form of a simulation, and basically you have to select, should this business be maybe a sole proprietorship, an S corporation, C corporation, should they form it as a partnership? Basically, you would select one of the options. Then you would select the reasoning. If you select this, why would you select this? And you'll have another drop-down menu selecting why, the reasoning behind this. So that could be in a form of a simulation. Also, this could be a form of a multiple choice. As I always say, simulations and multiple choice questions are the same, except they are framed differently. So we're going to go ahead and determine what is the optimal or the best situation for Jennifer and Alex. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So what will you choose? What will you choose? I want you to take a guess first. Well, I would choose a C corporation. The question is why? Well, let's go over several advantages if they incorporate as a C corporation, if they run their business as a C corporation. One, they need salaries. That was mentioned in the fact. So the company, the business now as a C corporation can pay them salaries for their role. They're active owners and they want to be paid as a salary. Well, also, if they are being paid as a salary through a corporation, the corporation is responsible for paying their Social Security and Medicare, the corporate portion of it. Well, again, think about it for a moment. They are the owner of the corporation, so they're basically paying their own Medicare and Social Security, although from whoever writing the check, it's the company, but it's their money anyway. Nevertheless, it's a business deduction for the corporation. Also, they mentioned they want fringe benefits. Well, if that's the case, remember, the corporation, they can give you fringe benefits. It's deductible for the corporation, non-taxable to the owners. That's also a plus. So notice we're looking at everything that was mentioned in the problem, and that's the C corporation fits this. Also, they can deduct the cost of salaries and benefits. Again, that's another plus. That's related to salaries and fringe benefits. So it looks like those are all support going toward a corporation. Also, there was something mentioned that's important, is they don't need to take any money out as dividend. Well, that's good. Why? Because in a corporation, when you take the money out, the money is taxed again. That's the problem with C corporation. It's double taxation. The money is taxed on the corporate level, then the money is taxed when taken out. But we are told in this problem they don't need to take the money out. So the net income of the business is subject only to 21%, the corporate level, making it more advantageous for now at least, because their tax rate is 30%. So that's cheaper for them. This rate is appealing relative to how much they pay. In other words, if they take that money out, or if they have a flow-through entities, if the money goes to them, they'll pay 30%. Well, they would rather have pay 21% at the corporate level, not take the money out as dividend. So you might be saying, but there's a double taxation. Yes, there's a double taxation, but they're not taking the money out. So under those circumstances, why you don't recommend an S or a C or a partnership? Well, although an S and a partnership offer path-through taxation, which avoid double taxation, they don't offer the same level of benefit for the fringe benefits. Remember, their fringe benefits, it will be taxable to them. It will, because they own more than 2%. In the case of C corporation, the fringe benefits like healthcare, retirement, and those could be tremendous cost, can be provided tax-free to owners, and these expenses are deductible by the corporation. This makes C corporation entity more attractive given the circumstances. From what perspective we're looking here? From compensation perspective. From a compensation perspective, they want to be paid, they want to have the fringe benefit. C corporation, and they don't want to take out dividend. C corporation is a better choice. Are these the only factors we would look at? No, we're focusing on those factors because we want to look from a compensation perspective. Again, in the real world, each business is different, each business is unique. Whether you want to do SC, but you should be able to answer the question on the CPA exam giving the facts. So you need to know what's deductible, what's not, what's taxable to the owner, what's not. Given what they need, you would recommend the best business structure for their need. In this situation, C is better for Alex and Jennifer. What should you do now? You want to go to Farhat Lectures, look at additional resources, lectures, multiple choice. That's going to help you, whether you're studying for your CPA exam, whether you are studying for your enrolled agent, whether you're taking a CPA, an income tax course, or any other professional certification. Invest in yourself. Good luck, study hard, and of course, stay safe.